All right, good morning, everyone. Start it up here. Okay, last night's session was kind of a non-event. You can see we just moved there sideways in U.S. markets for most of the session. Down slightly, but nothing material. Obviously, going into Thursday's meeting, I think we talked about this a few sessions ago. I really expect volatility to come down a bit, to kind of everyone and sit in a wait and see mode until the Fed now, because you just can't take the risk to position ahead of it. All the guys that are really materially going to move the market wouldn't be positioning ahead of it, and so I think that's what you're going to see. I think you're going to see sideways chop. Announcement on Friday, obviously there's more than just the rate hike. It's going to be the commentary afterward, but not that Friday, on Thursday. But bottom line is, so we're going to see a little bit more quiet days over the next few sessions than we may typically see. We have a few different things to look at in the market. We can talk about OPEC, and targeting to improve the market share or the production levels and that sort of thing, and iPhone sales, but it's all immaterial relative to what the Fed's going to do on Thursday. We move on into the Asian session, same sort of thing. There's no leadership whatsoever, but Shanghai down again. Once again, you can see it starting to slip away. It felt like there was a little bit of intervention maybe into last week. Then again, beginning of this week, we once again just kind of starting to plummet again. But what I think is positive is that even though China has kind of consistently started to push down again, the rest of the market doesn't look all that worried about it. So I think maybe the market's starting to get used to the Chinese story to some extent at the moment. In terms of corporate action today, with Clover out this morning, we're not even going to get into that. Market data, we'll talk about local current account balance this morning. We'll see that at 10. We've got CPI year-on-year and CPI core year-on-year 10:30, as well as PPI output out of the UK. We've got the ZEW surveys in Germany at 11. And then the States, we've got retail sales, empire manufacturing, and industrial production. I'm not so sure this sort of late stage data sets out of the States. I don't think that there's any data that's important enough to really warrant them to change what they would already have decided to do going into Thursday. So, for the most part, you can probably shake any of this data off. All right, let's get into the maps. I'm going to go through a couple things here. I'm going to go through a couple things here. We'll start here with the FTSE. So, if you see, we're making a bit of a ascending triangle here in the FTSE, and it looks like we dropped out of it a little bit yesterday. I think, the move yesterday was actually a really, really bad trading day out of the FTSE yesterday. We were up 70 points in the FTSE future at one point. I'm not 100% sure where we closed. I think we closed down about 35, 40 points. But, we were down 40, 50 points at one point. So we had a 2% reversal from high to low in the FTSE, and that came on the back of, not a lot of news, not a whole lot of anything. So if you want to stretch this out a little bit, you can see here really 62,000 as the big level. Is where we've kind of been failing, and you can see that's kind of marked itself as a major level. Once again yesterday, we kind of get up to that level, didn't quite get there, but we're very close, and then just made a hard reversal to sort of drop out of the bottom. So all of a sudden, the chart there in London not looking so great, relative to a couple of the others, which are still looking a little bit better than maybe it's looking. Next one we'll look at is West Texas Intermediate. I just want to show here, we're making a little bit of a opposite chart here, a little descending triangle, which is probably, this is, it's not an overwhelmingly bullish or bearish chart, but obviously the breakout from here will be significant. So below 44 in light sweet, and I think we've maybe come down and test the recent lows, and if we break out to the upside, then maybe that could be the next leg up for the commodity space. So just watch this one closely. I think that could really determine something important. May not do anything ahead of the Fed, but that's still something to watch there when the Fed comes. Next one we're going to look at, this is the gold miner index in the States, the GDX listed in ARCA. Okay, the major level here at right around 13 and change, maybe call it 1305, which is basically right where we closed. We closed at 1307. You can see there we slipped below it 2 sessions ago. Looked like we were going to break down, and we actually reversed nicely to close up close to the highs of the day. Still maintaining it this morning, but some of these charts are starting to look a little bit ominous. We did have a big reversal out of Harmony yesterday when the U.S. opened, but a totally opposite move in Siboney, which fell about probably 17-18% from the highs yesterday. So kind of confusing. A lot of these things moving in big percentage moves, but below 1305 on the GDX, it could get a little bit hairy again for some of these golds. I'll show you one of them to look at the moment. This is Rand Gold. So you're looking here, it's just broken down from to new recent lows. But the reason why I really wanted to show you this is we're going to go back all the way to a 5-year here and show you what this chart looks like. So definitely looking a little bit head and shoulder-ish. I don't even know if I'd try to throw this out as a head and shoulder, but definitely looking ominous, let's put it that way. So you can see we've dropped a little bit of support here, and we closed, or we traded below 36 yesterday. That was a new low. I still think we're below. If I just zoom in a little bit more, we're really below where I think the breakdown point is here, but I'd like to see a close below 36 to really trigger a major sell signal in Rand Gold. If you look at this chart in US dollars, sorry, let me just, here we go. If you look at this chart in US dollars, it's already broken down, as you can see here. So, this is, to me, I think, very important setup. This kind of goes in line with what we're seeing out the GDX. So just watch these shares over the next couple of days. Could be signaling a little bit of something. Could come in line with the Fed. I actually personally think if they raise, the gold price goes up, but that's my personal opinion. And then the last one I'll show this morning is SA Breweries, which you can see here making a bit of a bear flag, potentially already dropped out. I mean, depending on how you want to draw it. If you want to draw it from the wicks, then it's definitely dropped out. But either way, I think definitely not a positive setup here. Maybe looking to trade back toward the lows, especially with the Rand showing some strength closer to $600.